Good morning, good afternoon, good evening from whatever part of the world you're in right now. This is Trey from Trey's Trades, and this is my ham sandwiches that I'm going to eat as soon as I'm done with this video. This is day 2 of my $1,000 account challenge, and as it sits right now, the account was red today, 4%, I want to say. I ended up at $960.45, so it was a 4.48% red day, down $45.01 on the day. And I want to go over the trades that I took. I took 4 separate trades in the account today. 3 of them were on Palantir. 1 of them was on Nvidia. 1 of them was for a break even. 1 of them was for a gain. 2 of them were for a loss. We will talk about each of them and what I saw in the moment that led me to take the trade. And I think there is some value to be pulled from today as well. Like this is going to definitely be continuing to be a learning process and a learning curve. If you tail my trades, you're responsible for your losses. If you tail my trades, you're responsible for your wins. I'm not a guru. I don't expect this to go to $1 million. I'm just doing what I can, man. I'm a dude just trying to see what I can do. So with that being said, let's get into Palantir. Palantir on the 15-minute chart, I took a stab at this 15 minutes after the open, which I don't typically like doing. I don't typically take trades in the first 15, 30 minutes of the day because you don't have a whole lot of information to work with here. But Palantir on the daily time frame set all-time highs yesterday and tried pushing above the all-time highs today, but rejected very quickly. If you're looking at this on the 5-minute time frame, in the chat today, Vegas Chef Andrew said that he made 60% in 5 minutes and just got out up here, which I'm glad he did because immediately after this huge push up, which ended up being, from the bottom of the candle to the top of the candle, a 3.5% move in literally 5 minutes, you knifed all the way back down and gave it all back, which gave you this pretty ugly looking rejection candle in the 15-minute time frame. Now, I entered in pretty much immediately after that happened. And if you look at the 5 right here, what that would look like is 5, 10, 15 minutes. That means that I took my entry basically right about here. And it ended up popping up for a little bit on the 5-minute time frame, popped down, and you got to hammer back up. So at one point, I think I was up maybe like 15% pretty quickly, maybe even closer to 17 or 18. But I didn't take any profits because my profit target at the time, I set up my short entry like, this is long actually. Let me get the right one. My short entry like this. My invalidation was a break above pre-market highs, and I was targeting first intraday lows, but then secondly, pre-market lows, which would give you a 3.75 risk-to-reward ratio. And then, here you're looking at 2.4, which is still a good trade. I like to take at least a 2-to-1 risk-to-reward ratio anytime I'm setting up a trade. It came close, right? It came close to my intraday lows, close to the bottom of this first 5-minute candle. And that should have been, to me, the sign, right? Once you start wicking back up, I should have been like, all right, I'm up 10%. Let's just get some green and get out of this. But it did not end up selling for a loss. I actually held for a little while. I held here. I held through this 5-minute candle because I take 5-minute candle closes. And as long as the 5-minute candle closes beneath that, I had no reason to get out. And it didn't give me a reason to get out, so I stayed in. But this one, I ended up, I think, getting out of my trade. I saw this start to pop back up, and I got out before I even had a chance to see if this was going to get above my pre-market high level, and I got out at exactly break even. Let me just double check what the contracts were before I speak too soon. My first trade of the day was Palantir 118 puts for next week. I got in at 125 with 2 contracts. I got out at 125 with 2 contracts. I exited at 10:08. I got in at 9:45. So exiting at 10:08 means I exited somewhere in the middle of this candle right here. So it's frustrating a little bit because it actually didn't invalidate my trade. My 5-minute candle here stayed beneath. Like it closed beneath my stop loss. So if I waited it out like I did with this candle right here, I actually would have had a great opportunity to get back up at that freaking 18% green, 20% green mark and at least get some profit out of that, right? It's not like I had an awful red day today. I'm not pissed that I was down 4.4%. Would I have rather started the challenge with some green days back to back? For sure, right? That would have been pretty sick. But that's not what happened, and that's okay. But it could have been. And this is another one of those lessons where maybe here I should have been a little more patient and seen what the 5-minute candle close gave me instead of getting out, assuming that it's going to pop back up. I saw the volume was starting to tick a little bit higher on this, so I thought this was going to look more like a break above pre-market highs and try to come up and retest these intraday highs up here at 133 and some change. But it didn't happen. I could have got out of that trade for some profit. Unfortunately, that's not what happened. I took a small loss, or not a small loss, but a break even on that. And I took another stab at Palantir puts at approximately 1019. I got in my second round of puts at 1019, which would have been this candle right here. And the idea behind it, if I switch over to the 15-minute time frame, was I wanted to wait for it to break this uptrend, and maybe you can even see it better on the 5. I wanted to break an uptrend that had been set throughout the day here. Let me find this 1019 mark. I think it would have probably been this. And the reason that I did this is because Tesla, if you were to look at Tesla yesterday, this is where I kind of got juked out and scared out of my position. I'm going to make sure that it pops back up. This is where I got juked out and scared out of my position. If I had just waited for a pennant to break in either direction and pay attention to the volume closely, I could have caught this really nice melt-up squeeze that you got for like an hour and a half or 2 hours straight. Because once it broke this pennant, higher highs or lower highs, higher lows, setting up just a trend line here. If I had gotten in right when you saw volume pop up here, I would have made some good money. And I've had the same thought process with Palantir. Is okay. At 1019 here, you get this breakdown candle, this candle close in the wicks. And this is really what I was paying attention to, is this was getting swept over and over and over here. So I wanted to see if this candle right here, and I should have paid closer attention to the volume. I'll own that. This is something that maybe could have prevented me from taking a loss, because I did on this trade. This was a losing trade for me that set me back a little bit. But I got into it because I wanted to see it break the downtrend, and my risk tolerance essentially was, okay, now that we've broken the downtrend, I'm going to risk getting back into the downtrend, or the uptrend, as I was. And if we get back into the uptrend, I'll get out, and I'm going to be targeting first intraday lows, and then secondly, pre-market lows. So pretty tight stop. It was a very tight stop, but I got a bad entry on this. I got in literally at the bottom of this candle right here. So I was down immediately. I mean, the next 5-minute candle ripped back up, and then we popped back down. I was like 5 or 6% red, and then it just floated around for a little while. And I think on this candle right here, I said, I'm going to call this a hold and a break back above this previous uptrend. I'm going to get out of my position, and I ended up doing that. So I bought into 117 puts. My fill on both contracts was 131, and then 129 back to back. I filled them pretty fast, like 5 seconds apart. And then I sold my contracts, both of them at the same time, for 106, which is, I think, like a 17 or an 18% loss. Which is not ideal. Like, I would have much rather not taken that L, and I think that's an execution problem. I think going back in time, this is not typically my system, and I said this in yesterday's video. I don't typically like to play breakdowns like this, and if I'm going to, it has to look like a breakdown. The volume didn't give that. This, I think, was an avoidable L. Volume was not screaming, hey, this is going to go and die really soon here. It was still relatively lower than even just this sweep back up off of the lows here, right? And then volume dried up for the rest of the day, so there's not really much to write home about here, except for when we broke down, which unfortunately I didn't catch. I was off the stream at that point. I'll get into this as we get into the third trade that I took on Palantir. But my third trade after that was actually on Nvidia. And this was a W. This was a good trade. I could have made slightly more if I played weekly contracts, which expire on Friday, since today is Wednesday. But I didn't. I wanted to let this move a little bit slower. This moved a lot slower than Palantir did, let me say. This was a drastically slower moving stock. Not necessarily the stock, but the way the contracts trade. I'm sure that you guys know what I mean. If you trade options consistently, they just move slow. But I was playing a very clear cup and handle look, and I actually timed it pretty much perfect. This was great. This was like, I entered literally on the end of this 5-minute candle right here, and it immediately popped up. And I was looking for a test of intraday high right here, and I didn't hold the trade very long. I saw this 5-minute rejection candle, and in hindsight, what I probably could have done and should have done is wait to see if we crack beneath this breakout up candle, right? If we can crack beneath, like, this should have been my stop probably, is, hey, if we start setting, candles that close beneath this breakout candle, I'm going to get out of my position. But it didn't even do that. It just held an uptrend. Or even if it just did this, like, stay in until you break the uptrend, I would have been able to juice a little more out of this. But I got into my Nvidia calls at $1.39. There were 142 calls for next Friday, and I entered them at 11:56.05, which would have been Yeah, the exact start of this candle right here. So, I mean, I caught the bottom of this candle. It just pushed up, and I got out of those contracts at 153 for one, and the second one for $1.50. So it wasn't a spectacular trade. I'm not like, woo, a slam dunk. But I left a little bit of meat on the bone here. Like if I exited here for my first con, here for my second con, if I held it a little bit longer, and I'm not saying I'm going to time the top, I probably would have gotten out maybe like here, right? But I still would have got another 0.25% out of the move. And that's probably like 5, 10, 15% on my contract. So instead of being a 10% W, that could have been like a 20 or 25% W. That's how I could have probably executed that better. But this to me was a pretty clear, nice look. I mean, cup, handle, and when you broke above the handle, you got nice volume. This is something to pay attention to. This is my best trade of the day. It was my W of the day too. I think it could have got a little more meat out of the move, but not a whole lot. So I'm not like beating myself up that I didn't catch this last little bit. I'm happy that I had a good read. I'm happy that I executed that well. I really just looked at the chart. I saw the handle was forming, and it took me about a minute before I was like, yeah, I think I should take trade on this. And I took it, and it was a good one. My last trade for the day, Palantir once more. This wasn't even an awful trade, but this one is frustrating. It's frustrating as shit because I would take this trade 10 times out of 10, and I want to reiterate that. The only thing that maybe I got a bad read on, and I'm going to go over this as I evaluate the trade, is I should have looked at a larger time frame. The 15-minute did have a tweezer bottom, which could have given me some sort of inclination that, hey, maybe this isn't going to break down right now. But on the 5-minute time frame, which is what I took my trade on, I saw this. I saw, hey, you broke down underneath a level that was treated as support the entire start of the day. I mean, every time candles tried to break underneath this, they just couldn't do it. And when you did it, volume picked up, right? This is already a green flag for me. I don't have to think that hard. I'm thinking, okay, relative to the rest of the volume behind here, volume picked up on a breakdown. Cool. After that, you started to flag here. And in flags, you typically don't want volume to stay high. You want volume to dry out, which did happen, right? Dried out here. The stupid thing, and what really stunk, man, is immediately after this flag, which I entered, like I'm going to tell you my entry here. I bought Palantir 116 puts at 12.20.58. So let's just call that 12.21. I bought two for $1.03. They were 116 puts. 12.20.58 would have been the start of this candle right here. I was green right off the bat. Like I bought up here and it ripped down like maybe I made 5 or 6% immediately off that move. But then it bounced, and I wasn't really super concerned with the look, right? Volume's drying up still. This isn't like raising any alarms in my brain. But at this exact same time, SPY got a face ripper candle. It really did. What would this have been? 12.20. This one. This candle right here. This 12.30 candle, I think, aligns perfectly with this candle right here. And it invalidated my flag. And my trade setup, or my risk reward was, okay, I took my trade here, so I didn't take a huge loss, which I'm happy about. This was a well-planned trade and a low-risk trade to me in comparison to some other ones that I've taken in the past. I don't know why this isn't letting me put my tool down. Let's try one more time. The trade setup was this. If a 5-minute candle closes above these previous highs, then I'm getting out. My target is first intraday lows, but then secondly, and I wasn't even really paying attention to intraday lows. I mean, when you're flagging right above intraday lows, I'm thinking you're going to break down. So I'm targeting here, which is a 4.7 risk-reward ratio. I was targeting pre-market lows. That was where I wanted to see the trade come down to. So I didn't take a huge loss, which is good. I mean, I got in at 103. I exited at 12.34 at 92 cents. So what is that, like a 10% loss, slightly more than that? I got out on this candle right here. I didn't even wait for the whole thing to close, which I usually do, but volume picked up in relation to these previous 3 candles right here. So I said, all right, I'm just going to skedaddle. And it still abided by my risk tolerance. And I literally left the stream immediately after this. If I had stayed in stream, I don't know if I would have tried to get back into it, to be honest, to catch this move. But this is a silly one, man, because it just juked me out. I mean, this is just a fake out. It was a bear flag. Fake break up. I mean, if we look at this on the 15-minute time frame, I bet you the 15 didn't even close. It didn't. Yeah, so if I was trading this on the 15-minute time frame, which you can certainly do when you're playing contracts that have, 2 weeks till expiration, or they're not weeklies at the very least, I wouldn't have gotten stopped out on that, which is annoying. Oh, that's annoying. It's annoying because I had the right idea. I mean, it was a lot like earlier where my first trade of the day, I had the right idea, I had the right trade, and I got stopped out of a winning trade. And I stopped myself out the first time. So this one I'm more upset with than this last trade, right? This one's frustrating to me because I could have made money on that and I didn't because I got scared. This one, however, God, dude, it's just annoying because on the 15-minute time frame, if I looked at a different time frame, I wouldn't have gotten stopped out and I would have made, I mean, not crazy. I would have definitely looked at this on the 5 on this little wick right here, heavy volume. You're getting a wick. I'd be like, time to take my money and get the fuck out of here, right? You're looking like you might be teasing a sweep underneath, intraday lows. And it would have been crazy, maybe 15 or 20%, but it still would have been a green day. And if I had executed this on a 15-minute time frame, if I didn't, stop myself out early ahead of my plan on this trade, I would have maybe been slightly above break even. I was green on Nvidia. I took a loss. I mean, this one right here was just a bad trade. I'm not even going to say anything other than that. It was a bad entry. I got it at the bottom of this little sweep candle with low volume, and I got dogged. That's fine. I can't say anything about that. That was just poor execution. I'll take that every day of the week. It was just a bad trade. This one could have been a winning trade. This one could have been a winning trade. I could have been 3 for 4 today, probably slightly green. But it's not what happened. That's not reality. And we can't speak in terms of what ifs. All I can do is look at it and be like, well, this is where I went wrong today. What could I have done to prevent that? What can I do in the future so this doesn't happen again? So moving forward in the future, if I'm playing weekly contracts or next week, I've got more than 2 or 3 or 4 or 5 days till expiration. I need to pay more attention to these 15-minute time frames because if I'd paid attention to this 15-minute time frame, I wouldn't have gotten stopped out of this. I would have still been in this trade. It would have been a green one. This one back here, maybe I should have just taken my quick freaking hit and run, right? Maybe I should have, it popped down and I was up 18% in 4 minutes and I should have just taken my 18% in 4 minutes. That's also something to be, noteworthy of. But overall, I'm not going to beat myself up over this. It really was just a red day. I was red 4 point something percent, 4.48%, down $45. The account's at 960.45. I'm not super deterred by that. I don't think that it is abnormal to have red days. I don't think this is an absurd one. I don't think that I made super poor decisions. I think I managed my risk well. And my number one priority right now, especially with my history, for anybody who paid attention to my video when I came back, announcing the comeback, I lost all my money because I was gambling, because I was just a fucking dummy. My number one priority, even more than making money right now, is preserving money. I want to limit my losses as much as humanly possible because if I can survive the red days, I know that I have good green days. I've had plenty of great trades in my life. My problem has always been my losses outweigh my gains. So if I can manage these losses well, these days where things aren't going spectacular, where you're kind of grinding a little bit to make your money, then when I have my green days and things are just going great and I have a 50, 60, 80, 100% trade or a 10, 15, 20% day in the portfolio, I'm not going to look back and be like, man, thank God, because I just made back all my losses for the last 5 days. I'm going to look back and say, thank God I might manage my losses, so I'm actually green right now. My account looks good. And that's what I'm focused on. So the moral of the story for me today was, I started off the day red after my second trade. I came back slightly. My Nvidia trade got me to negative $20, and then I ended up back at negative $40 or so. And I'm just managing risk. I want to make sure my losses aren't crazy. I'm going to keep showing up every day and try to make the green days count and try to keep the red days small. That's all I got. Hope that was valuable to you. I'll be streaming again tomorrow, 9 to noon. Take it easy.